Kaluma Dan Manzo is there as well. Nelson Harvey is there as well. He had a show this morning at Citizen TV, and I think he dashed there immediately after that. But once again, apologies for that. I am having to really squint my eyes to see a little bit about what's happening there. Let's carry on with our discussion in studio. We're talking about retrenchment in the banking sector. I've actually seen an interesting tweet, which I will try and pull up even as we carry on with this discussion. But of course, to my guest in studio coming to you, he had raised the question about the his view is that there has been a stagnation in the private sector. Do you agree with his thoughts?
Yes, basically the private sector credit growth, it really slumped last year, post even the Banking Act being capped. The credit sector growth was around 2.4%. This is quite low compared to averages of close to 14%. So it's not that the demand for loans is not there. The demand for credit is quite, almost all sectors is still going up. However, it's just because banks are not now able to price for the risk that they want to take on, so they're not issuing as much loans as they actually should be. So this has led to a slowdown in the private sector. And the access to credit has pushed most businesses now also to other forms of accessing credit. We have the loan sharks and the like. Okay.
I want to read a tweet, a response to something that you said earlier in the show. You said that banks are not now increasing revenues. The other way to maintain profitability is to lay off workers. Someone has tweeted in response and said, this was bound to happen. We no longer need to use a bank to transact currencies. Banks are a last resort. Joram, let me get a response from you.
Well, that's true. I mean, the digital was going to eat into a lot of banking operations that were previously done by people. But it's also important to note that not every banking function can be carried out using the mobile phone. There are some things that still require some complex sort of transactions, but you'd still find that some of these staff members end up being casualties of the fact that the banks need to reduce costs. And therefore, it's not entirely fair to say that, that digital banking is covering every transaction that was done. There's certain types of complex transactions that would require a banker to have a complex discussion with a business person before they come to an agreement. But now that those discussions are not even going on, so you find the business people are losing out on certain sophisticated forms of financing that could, help with their trade and the like.
Okay, yeah. I mean, I discovered the other day that with mobile apps now, you can even get a salary advance. Those are things you need to go and discuss with your banker before. Can you afford it? What are your current loan obligations? But nowadays, just a few taps here and there, and the money is in your account. Yes. I want to look at a report, and if we can have that graphic up, that was released by the company that this gentleman co-founded, that Joram Mwinamo, Wild International. It talked about the Kenyan SME sector. It was a wide-ranging report, but I've picked bits and pieces. The report stated that 68% of SMEs have no access to finance. And SME's principal source of finance, therefore, 57% is from business profits, 25% is from savings, banks is 12%, while others is 6%. So let me start with that. 68% of SMEs have no access to finance. Worrying. That's what? So 70%, that's 7 out of 10. So for every 10 SMEs you meet, 7 of them have no access to finance. Yes,
and that's actually the spillover effect of this interest rate.
So it's all connected.
It's all connected, and it's a reason why the banks are not lending to the SMEs, and therefore you can imagine what's happening. One thing that came out very clearly is that people were eating into their savings, because also traditionally during an election year you find that trade also slows down because of the electioneering. So you find that people are doing, in a sense, less business, but also eating into their profitability or into their savings. So things that they would have done with what they had saved the previous year ends up going into funding business operations, so that you can keep doors open until the recovery after elections. And then if they're not borrowing money from formal sources, it's likely that loan sharks were having a field day, because that's where people end up turning to be able to finance certain critical aspects of their businesses. If you know anything about the loan sharks, is that 1, the interest rates end up being very high. 2, if you default, it's very likely that you're losing some form of collateral of some sort. It could be a car, could be a fridge, could be whatever it is. But then at the end of the day, the fact that people are forced into alternative forms means that they were either operating very expensively or wiping out that which they are set aside for a rainy day.
Okay. Yeah. Before I come to a reaction from you, Caleb, you also mentioned, and this is in the last slide, I don't know if we'll get a chance to put that up, that 55% of respondents indicated that they experienced a reduction of employees.
Yes.
So basically, this is what I see from the SME sector from the time when your report was carried out. 7 out of 10 cannot access finance. Nearly 6 out of 10 had to retrench at some point over the last couple of months. Is there any good news in 2017 from the SME sector?
They're doing the same thing that the banks are doing, because then at the end of the day, you can only tighten your belt so far. But there's something very interesting that happened as well. You still had a number of those SMEs, almost a similar percentage, marginally growing their revenues, which means that they were very resilient through and through. Because we've had economic growth happening, but the question is, how much more would the growth have been had it, had the economic environment been favorable? Because, you've had a lot of investment coming into Kenya and a lot of attention on Kenya as a center of trade in the region. So it means that if we had favorable policies on the ground, that would have seen a much larger percentage of growth amongst the SMEs. So it means they still remained quite resilient, despite the fact that they let go of people. They still kept their doors open and managed to
which needs to be applauded. Even
if
you released a few people, the fact that you're able to continue to operate is a good thing.
In fact, global reports that have been done over and over again show that during a time when the economy slows down, the people who remain very resilient tend to be the SMEs. So I think it's a sector that we need to put a lot more focus on than we've done in the past, because of people just really tighten their belts, but they keep it going, and it shows that our SME sector is very resilient.
That sounds like good news. When I read your report, I was a bit worried. Caleb, nodding your head quite a bit. Does that mean that you agree? You may or may not have seen this report, but you've heard a little bit about it. What are your thoughts?
My thoughts, historically, SMEs have been one of the major growth drivers in terms of getting interest revenue from, because banks used to loan to them at quite high rates. My issue now comes in when, owing to the capping, most banks tend to shy away from loaning to these SMEs. But these are the same SMEs that they've banked for close to 5, they've been with them through the journey of their business. They know their clients. So then why are they now not able to price in the risk, having already all that data and information that they have on the SMEs? So I think the banks there, they kind of shifted goals, which was not quite good. I think that they should have a better grasp of their clients and be able to still lend to them, because as my colleague Jerome said, there's a lot that SMEs contribute to the economy, and we actually get a lot of economic growth and driving from the business that SMEs carry out.
Everything needs to be done to ensure that they stay open and they stay operational.
Yes.
So what should an SME owner be thinking today? Number one, you see what's happening in the banking sector. Clearly, it's not a good story there. 2017 was a tough year, and it seems that part of what made 2017 tough, the very heated political environment, has spilled over, at least for the first month of 2018. What should an SME owner be thinking with all this happening around them, Joro?
I think one thing,
and I hope you won't say more tightening of the belt.
Not necessarily more tightening of the belt.
I don't know if there are any more.
But looking into the next 5 years, I tell people, start planning for the next election now.
And you've said that before, in a different show we had.
Because the thing is, people always end up being caught off guard in the 5th year, yet this cycle always keeps happening. So one of the things to do is be very aggressive with business in the next 4 years, in building reserves, in looking at alternative ways of serving the market, looking at positioning yourself to benefit from sectors that generally don't slow down during elections. Sometimes non-profits continue their business, as is. So if you start looking ahead and planning ahead right now, you should be able to make sure that come the next election, you're a lot more prepared. Generally, we're already seeing a recovery in very many sectors. We're already seeing a recovery in terms of foreign direct investment, after the inauguration. Despite the fact that there's still uncertainty politically, a lot of people have gone ahead to still make their investments. So we are starting to see economic activity picking up. And that's why I say, hit the ground running, forget the politics that's happening around. You know, you can glimpse to just see if you'll get home safely and that kind of thing if you're in Nairobi and, you know, there's activity, but focus as much as possible on building your business right now.
Okay.
Yeah.
Caleb, so I'm trying to mix two topics here, but they're very much related. So a lot of people clearly have lost their jobs, whether it's in the banking sector, it's in the SME sector as well. Let's try and put a face to these numbers. We can talk about 200, 300, but those are people who had dependents, who had dreams, and they now find themselves without jobs. It's the 1st of February, and for a certain number of National Bank employees, what did we have as numbers? 100, 150? Yeah. They need to figure out what to do with their lives. Do our sectors prepare individuals for life after employment? Because if I leave a banking job that I've been at for the last 10, 15 years, the best thing I know how to do is banking. I knock doors on other banks, they tell me, I'm sorry, we're not hiring, we're actually retrenching as well. Where does a person proceed to from there? What are some of the options from some of the data that you've seen in the past?
Well, especially it becomes quite hard, especially for quite skilled workers that have the skills in one particular industry. Some skills are transferable, maybe in terms of business organization and business development, that you can apply across multiple industries that are still growing. However, some that are just banking skills, it becomes hard. Let's say if I was a trader at a front desk or something like that, I can now come to transfer my skills to other facets in life. However, the spillover effect, of course, of laying off in one sector also comes up in other sectors. But you can still find possibly if banking is not doing well, maybe agriculture can be doing well, and there might be opportunity there. In terms of just preparing for life after retirement, we always try to advise clients and people to try and get the financial stability and be financially prepared from the moment that they can start planning for retirement, not when you see that your heydays are coming, but immediately you get into the workforce is when you start now trying to look at your retirement goals. Just parts of becoming financially stable, put some in savings, put some of your money in investments, so that at least once you do retire, you have a steady flow of income and you can still manage a financially stable life. Okay,
Joram, last year at some point we had another studio discussion around election time, and you stated that, and you're part of a consulting and training group, that you've had to do a lot of training on retrenchment, or at least that has come to light with the companies that you consult with. Have those reports changed, or are you still hearing that? Is that still the message out there?
Well, I think there's still quite a lot of downsizing and we might see a spillover.
So we're not out of the woods just yet.
We may not completely be out of the woods. I wanted to just put a positive twist. I think one of the things people could begin to look at is the 4 priority sectors that the government has said they're going to be focusing on. They seem to be very intent on making the housing, manufacturing, food security work. And so what is likely to happen is that because of the government push in that direction, there's likely to be opportunities that will come out in that direction in a massive way. You can, 500,000 houses, whether they actually achieve it or not, is still not a small feat. Like, we've never even achieved those kind of numbers before, even maybe over a 10 or 20 year period. And so you're likely to see offshoots of these particular sectors, maybe supporting those sectors, importing materials in that sector, and those kind of things may present opportunities. But one of the things we always tell people, if you're being retrenched and you get your package, don't be in a hurry to put that money into an industry you do not understand. So put it out somewhere, maybe invest it in a place that, even if it may generate a low interest return of some sort, don't be in a hurry to jump into something that you don't necessarily understand. Whatever it is you're going to start afterwards, start on a small scale, or if you had not already started beforehand, just so that you can ease yourself into it, understand, because you can burn your money. A lot of retrenchees or retirees end up burning their money very quickly in something they don't understand, and then you're back to square one. So you'd say make the transition a bit more gradually and not in a hurry.
Finally, I want us to briefly touch on matters innovation. we cannot get away from the fact that innovation is one of the reasons why banks can afford to let go of as many people. We've seen certain bank branches which operate 24 hours. The automated machine there can take your check, it can issue money. I mean, we're seeing some amazing innovations in Nairobi and in some of the urban areas as well. There are those watching us at home thinking, you know what, okay, fine, so these innovations are happening in banking, it's affecting people, but it can't touch me in my sector. Which sectors do you primarily think are going to be affected by what we are seeing as clearly the human cost of innovation? That's a term I came up with. I hope it makes sense.
Well, the banking sector has historically also been quite innovative. It's been one of the leading sectors. You also have technology. If you're in the technology sector, at least that's one of the things that you're going there already having known that it's an innovative driven kind of sector. We're also trying to see some of the innovations spill over to manufacturing. I'm sure we don't have the high level robots that can now also aid and automate most of the processes in manufacturing, but it is happening in the world. We also have some I'll say mainly manufacturing and agri-processing.
And those jobs are going to be taken over by robots in the next couple of years, pretty much.
There's a lot of automation that's going into that. There's a lot of robots that are coming up.
Do you think a robot could take my job one day?
Well,
yeah, having a chat with a
robot. Some roles still require a relationship aspect. So you still want to have the human interaction, but we can't be oblivious to the fact that there's a lot of robotics and artificial intelligence that has taken over our life. These days, if you want something on Google, you can just ask. There's a Siri for Apple.
Yes.
So there's a lot of automation that is coming up, and it shall intertwine in.
So next time I need an investment analyst, instead of calling Caleb, I might just call up a robot. Joram, let me get your thoughts.
I think there is no sector that is safe from whether it's mechanization, automation, or technology.
And you need to make that very clear for those who are watching. You're not safe wherever you are.
Yes, you're not safe wherever. Even nowadays, with some certain levels of legal services, you can find an automated thing to give you, an analysis and to give you answers, accounting. So software is really taking over and technology all over the place. But the interesting thing is, you look at some global studies, you still end up finding the fact that on the technology side, there's always a shortage of people. So as the innovation comes in, the people who drive that innovation and create it, there's always a shortage of probably technology-oriented, skills. So if you're in the medical field, it would be helpful to start understanding technology. If you're in the legal field, start understanding technology, because people who have a complement of, a traditional skill and technology will, in one way or another, always be valuable.
Okay.
There are economies that are very good at retraining people. Ours, unfortunately, is not very good at that. But one of the things to look at is investing in technology skills that can keep you relevant going forward.
What an eye-opener of a discussion. Caleb Mugendi, investment analyst, Saiton. Joram Winamo, co-founder, or founder rather. Co-founder, founder? Founder Wild International. I don't know why I'm giving you a part. Thank you, gentlemen, for this discussion. My director is asking behind the scenes, can a robot take over our jobs? Clearly from this discussion, that can happen. So retrenchment, the new norm, I guess we're going to hear more and more of that. But there's going to be creation, I guess, of other jobs in certain sectors. Yeah. But as to whether they'll balance out, that those who are leaving certain sectors will be balanced by those who join other sectors, I'm not quite sure about that. Gentlemen, very exciting discussion that we've had today, and for finding time to be here with us. Let's now take a look at what's happening in terms of news on the international front. We start by talking about the super blue moon. I'm sure some of you got a chance to see it yesterday. The second full moon of January passed through Earth's shadow in a super blue blood moon eclipse yesterday, a rare lunar sight that was visible to millions of observers around the world. Now, yesterday's lunar eclipse was the first to coincide with a blue moon, a second full moon in 1 month, that's in North America, in over 150 years. It was also the second supermoon of 2018, with the moon appearing slightly bigger and brighter than usual due to its closeness to Earth. And to top it off, the supermoon passed through Earth's shadow yesterday, casting a reddish hue on the lunar